Excellent. Okay, everybody, thank you for coming along for tonight to meet the expert who we've got, Mike Savage from Channel Finance. The reason I asked Mike to come along tonight was because what I was hearing a lot from clients of all sizes was maybe frustrations around the computer saying no, but the banks just look at the balance sheet and make a decision based on, almost irrelevant details. And what I liked about Mike was the approach to finance, where they look at a lot bit more than just the balance sheet, especially when it comes to things like commercial assets. So I know there's some people on the call today that are looking at buying some commercial property. There's some people on the call today that are looking for funding for developments, for sort of buy to let or buy to flip. It's all there. So I thought, great time to get Mike to come along, do a meet the expert session, and just talk us through the practicalities and the realities of funding. So without further ado, I will shut up and hand over to Mike to talk about all things funding. Mike, over to you.
No problem. Thank you very much, Stuart, and I really appreciate you inviting me along, and hopefully I can share my knowledge to everyone that's kind of had the courtesy to come on and extend their time to me. So my name is Michael Savage. I am an FCA directly authorised finance broker. I cover the UK. Qualified or a background in accountancy. I'm a chartered accountant to kind of a trade. However, I took the pragmatic approach of getting into the world of finance brokering because I've got a focus or a tendency to kind of I want to help or go that kind of a bit deeper to find solutions. And another job that you'll probably see behind me here, I do football agency. And with that, if you mean you're the intermediary, you're essentially the man in the middle. So you deal with the club, you deal with obviously the player, you put them together. Finance, if I'm brutally honest with you, is no different. You could go on to talk to different people. They'll try and make it sound complicated, usually to up their fees. But as far as where we're concerned or where I'm concerned and how we kind of operate, we are effectively bringing the bank manager back. And that's what a broker should do. So there's many facets of finance brokering. So they cover off commercial, asset, which can be like for equipment, plant equipment. It can be for vehicles. It could be for tools. An asset can also be considered as a property. There's cash flow facilities, which is SME loans or kind of a growth funding. There's factoring within that as well. And then you've got like other kind of a funding that you can use, but we've got access to is taking second charge or multiple charges out in property, which would release cash flow to you, or bridging. So if you're kind of attending to bridge the gap, we or I or my business and how we operate is we try and give impartial advice. We've got over 130 lenders on our panel. And that effectively is to kind of give the best knowledge, if you mean, or the best in-depth approach to what our clients are looking for. So again, Stuart and the Power Within have invited me on. We deal a lot within the construction sector. If you mean, in the construction sector is quite volatile, if I'm honest with you. So a lot of lenders or finance houses are a bit sceptical with lending, and if they are lending, they want securities or they want this, that, and the next thing. So it's my job to kind of get the right fit, get the best rate, and make sure that all parties are kind of is effectively covered off. But yeah, it can be in the approach to it. It should be fairly straightforward. So again, depending on what lender you go to, if you mean some will deal with like new startups, some will kind of want to see a business that's been trading for a minimum of 2 years, 3 years. Some will want to see like effectively that you've got bank accounts ready, or if you mean or if you're looking for a loan, they'll want to see like what your pipeline looks like, what your kind of creditors, your debitors and whatnot. So depending really on the type of funding that you're looking for, there should really be a home for it if you go to the right broker. And it's not always credit driven. There's this misconception within finance that your credit has to be A-OK, your personal credit has to be fantastic, your business credit has to be fantastic. If you've got an asset, I can almost guarantee you that we'll be able to provide funding for it. Now, if it's a vehicle or a plant purchase, then depending on what your credit looks like is going to be reflective of what deposit that you put in. So the more deposit, I'm not trying to kind of tell you how to suck eggs, but the more deposit you've got, the less risk it is to the lender. So the more appetite that they're going to have to do business with you. And if you're unknown to a lender, they'll want to try and see if they can build relationships. And that's just on asset. If you go down the invoice route, that's the exact same. The invoice or the factoring facilities is only good as the clients that you work with. So they're not really searching you per se. They're actually searching who you're working for. So if that's like Bear Construction or it's and you say, depending on what type of business it is, they'll look into them, effectively see what credit line they're providing you with, and they'll back that up. So there's very little due diligence or credit policy set on yourself. If it's property related, then it usually works down to, or not usually, it does, it's loan to value. So if you've had a mortgage in the past, commercial funding, commercial finance works the exact same. It's all down to loan to value. Typically, where lenders sit is anywhere in the region between 65 to 75% loan to value. And that can either be on the purchase price or the valuation. And again, if you find yourself a good broker, they'll be able to put you in tow with that lender to get the best reward. So yeah, I'm trying to cover off a lot with you in a short period of time, but I'm open to, if you want to kind of ask any questions or typically what your business looks like, because this is what this is for, if you mean, so that we can kind of have clear and concise dialogue, and I'll try and help you as much as I possibly can. And if it has to go offline, over the next couple of days or whatever, if you want to ask more in-depth questions or you need my help, then I'm more than happy to do that as well.
Right, can I just jump in here, actually?
Yes.
Because I've got a couple of questions here to preempt this. When you're going for a commercial deal,
yes,
right, what is the typical deposit? Did you say about 35%, maybe 70% loan to value, 30% deposit? Is that fair?
Yeah, 25 to 35%. If you mean, so it's usually 65% to 75% loan to value. And that can be either done on the purchase price or the valuation. So dependent in where you sit or what lender you go to. If it's done on the valuation, the valuation normally is a lot more than what you're kind of buying it for. So the rates is going to be slightly different. So they're going to be slightly more higher in most cases. And if it's done on the purchase price, then it's a better deal for everyone because it's less risk to the lender. Yep. And you get a better rate.
Okay. Next question I got here, it's just that somebody that couldn't attend gave me some questions here. So that was number one.
No problem.
Number two was, one of the advantages that we've got here is with clients that are in construction, have got the advantage to buy a property that's maybe not derelict, but certainly needing a lot of renovation done, and are able to do that renovation at cost price. So they can very quickly get equity in that property long even before it's sold. Is it possible to get funding for, so let's say I buy a rundown property at 50 grand, and once that's renovated, that's going to be worth 100k. Is it possible to borrow more than 50 from the outset, or would you have to go back and re-borrow, if that makes sense?
You can, if you mean, so from the outset, you can basically have two funding agreements running parallel with each other. So you get the purchase price and that could be a bridge, or it could be a mortgage. And then essentially you would look at potentially a second charge, which would give you more money up front. So, and it's always done on the value. So if it's valued at 50 and you're looking for 50, then that's not really going to work. If it's valued for 100 and you're looking for 50, then that's 50% loan to value. And then the end value might be 125 to 130 to 140. So you would get a percentage of that. Now, if a broker is only looking at you, if you like, as in like in that one development, then they're not really working for you. But if you've got any other assets in behind the scenes, then they can basically take a second charge, which could be a lot less expensive for you, because to set up bridging loans and to set up mezzanine funding, they usually come with, or not usually, they do have some form of kind of a setup fee, which is from the lender, which is an arrangement fee. But to answer your question in a roundabout way, yes, you can, but it's all done on values.
Okay. So could you borrow something, 70% loan to value in the property? We get that. Can you borrow for the renovation costs?
Yes, you can. That's mezzanine funding. You 100%
Excellent.
can.
Excellent. Good stuff. So for people that are trying to do a project with a limited budget, they can borrow for the asset value, and then they can also borrow for the renovation costs as well.
Yeah, we do this a lot. If we're doing a lot of fit outs, I used to do it but when I was trying to build up my name and whatnot 4 or 5 years ago, and I was going around and people that were kind of refitting out gyms or they were kitting out hotels or restaurants. That is the ideal. That they go in, they buy it quick. They're usually converting a building. So they've bought a building over, they're converting it into like a restaurant. The internal works for that costs a lot of money because they have to basically strip it all out and then they kind of have to do it. And if they've not got the capital there from day one, then there's probably 2 or 3 different levels of funding that you can get access to. So a good broker will kind of guide you to what options are open to you rather than this is the only option that you've got. Thanks very much. You need to put your neck on the line. That's it. So there's many different layers.
Excellent. And I think that the other question I had here, you already asked that, was how important is the actual credit rating both for you personally and the business? And you've already answered that, saying it's not the be all and
It's
end all.
all
So that's great.
Yeah, funding's all done in the asset. Do you mean that this is what
Yeah.
it is? So whether it's a kind of a hard asset like plant and machinery, equipment or whatnot, an asset being the kind of a property, the lenders are always going to look at that. And if it's you get two ends of the kind of a spectrum here. If you're rate driven and rate conscious, your credit rating is going to be up there, top end. It's going to be the best of the best because you're wanting the kind of the best deals. If it's not, and you're kind of saying, listen, like every business goes through, it's a wee bit of a tumble dryer effect. To make money, you're probably taking a couple of knocks within time, and I see that more often than not. And when I speak to my clients, they're usually a bit embarrassed and saying, by the way, listen, my credit's not so great because they're always the last to pay themselves and everything else. So listen, my credit's not great. I feel embarrassed here. It's a bit poor. However, here's where we are. I've missed a couple of mortgage payments. If there's good enough rationale behind it, so you've not been fraudulent, you've not done anything kind of untoward, even clientele with kind of like previous historic kind of liquidations, I've managed to get them funding. Do you know what I mean? So there's it's very, very, very rare that I can't get funding, but it's all about taking your client to the right lender. And
Yeah.
with over 130 lenders on our panel, listen, there's other brokers out there as well who are equally as good, that can kind of provide those services, but your broker should be there to work for you. And how my approach to kind of a lending has always been like we've got the commercial side of things, we've got the second charge side of things, we've got the invoice factor, and we've got the asset finance. We've got so many kind of different facets. We've got the soft asset, so that realistically we should be able to help you.
Excellent. Okay. I'll let you crack on.
No, I don't know if anybody kind of wants to kind of ask me like any questions or whatnot, or there's anything there from a funding perspective. I've capped off what we can do, or what a kind of a broker should be there to do. There's many lending platforms, It's just about finding the right one, and there's a lender for everyone. There literally is a lender for everyone. You just have to have the knowledge to find it. Or find them.
Absolutely. So let's see who's got some question then. Carl had his hand up there. Carl, over to you and Ben.
Hiya, Mike.
Yeah.
We've got the possibility of purchasing some land with planning permission for a 3-bed detached,
Yeah.
direct from the vendor. No agents are involved. I've known the guy for 45 years, and he's willing to take 50% of the land price to start off with, and 50% of the land after we've built it and then refinanced it. Don't have any actual funding myself, although I've got some equity in my house. But that's the sort of deal immediately that we'd be looking at. And how do we go about that? How to finance the build, and then once it's built, how to refinance it to pay everybody off, whether it's a bridging loan and the other 50% of the land cost.
To be honest with you, Carol, that's fairly straightforward. If you're putting 50% up front and you're looking for kind of the 50% kind of a capital cost up front, if the only thing that you're really going to need day one is the planning consent for it, and like an up-to-date survey. So this is what a DM Hall says, or a Giant Shepherd, or whoever has been out and surveyed it. This is what the land's worth with the planning permission as it stands just now. And if that's £100,000, for example, then we'll be able to get you 50-60% of that day one. And that could be like bridging, or it can be kind of a development. If it's bridging and you're just looking to purchase it, then we can use another type of lending to allow that to build out, and then you'll get drawdowns as you put the foundations in, as you make it wind and watertight, as you put you'll get kind of a different levels of money at that particular time. And then once all that's done, you would get a final valuation, and you can repay everybody back, and we can flip you either out onto a mortgage, or you sell it and you take the money for yourself. It's a fairly simple, straightforward transaction to do.
I'll get all your contact details at the end, and we'll pursue this because I have other property development ideas as well. But that's the first one that's immediate for us. But thanks, Mike.
No worries, Carol. Thank you. Thank you for your question.
Excellent. Good result there. Any other questions? Give me a thumbs up. John, over to you, John.
So I know you were talking about bridging and things, Mike. If I was to work out rough percentages, say I took a bridging loan out to buy, let's say, a house that was set on fire, to purchase, use my own money to the build. I know that that's going to be quite high because it's usually on a percentage basis. So if I paid 1% over 4 months, at the end of that, if I wanted to refinance that into, say, a buy-to-let mortgage, how much money would I lose by moving it over? Would I need additional cash in to account for refinancing?
So the typical kind of a monthly, so bridging's charged at anywhere from like 0.75 up to 1.25% per month. That is so, and it's usually a minimum of 3 months you would get locked in for. The options that you've got at that particular stage is service it monthly. So you would pay the 1.25% or 1% or 0.75% monthly on the amount that you've borrowed, or you would roll it up, and then you would get like an end figure. So if it was 100 grand, say that you kind of acquired, and you rolled it up, the end figure, if you get the 100 grand, and then it would be, you had to pay back to the lender 115. It's all done again on loan to value. So whatever the property is valued at, then we would find you kind of a lender for it. There's not any additional charges that get put on it. And I don't know if I'm answering this correctly. There's not. They'll not charge any additional exit fees. It's just they'll just work it out in a loan to value for flip it into a buy-to-let mortgage, and it's something that is very, very, very common. And a lot of up-and-coming property gurus, if you go to all these kind of like property classes and whatnot, who will deal with a good few of them. They'll go out, they'll buy properties, they'll put things in kind of like credit cards, for example, and then they'll buy the property, and then they'll either sell it or they'll flip it into their buy-to-let. And you've got 4 or 5 lenders that are comfortable with that and that will do it all day long. So the only thing you're really going to need if you're putting into a buy-to-let is it going to meet the loan to value? And then the second is do you have someone that's going to rent it? and is the rentable value going to be more than the mortgage? It's again, it's fairly straightforward. It's happens that, yeah.
The big question would be, so deciding whether you want to take more of a commercial finance route or a bridging route is mainly down to time then. Is that the right?
Yes, 100%. If you mean bridging, you can turn around within. The quickest bridging deal that we've done is within 24 hours because everything was just kind of a sitting there. Typically, it usually takes between 7 and 10 days because once we get a decision in principle and an approval, it then goes on to solicitors. And once it goes into the solicitor's domain that we've not got any kind of a control of, putting into a commercial route, you're going to be a minimum of 4 weeks, minimum, because it's a whole different type of transaction. And that it's all going to be dependent as well, whether it's kind of a limited company that's doing it or kind of a regulated, which can add kind of a few days on.
Okay. Thank you.
No worries, no problem, John.
Excellent. Anybody else? Give me a thumbs up or a hand if you've got a question. Sonny, over to you.
Can you hear me? Okay.
Yep. Can you now? Yep.
Payroll. What recommendations would you have for sort of bridging the gap between getting paid by invoices coming in from contractors and being able to pay the guys on site? Feasible options. I mean, I've looked into it before, and some of the rates are just like extortionate, and you can get yourself into sort of all sorts of bother with some of the loan rates there. But
yeah,
is there any sort of feasible options that?
Yeah, is it subcontractors that you're talking about kind of a paying, or is it kind of like employees?
So everyone really, just making sure that there's sort of lean times when we're waiting for invoices to come through. Some people are on some of our clients are on 60-day payment terms, and we're paying guys weekly or fortnightly.
Yeah.
Obviously, if there's any delay in that payment, in those payments, things can get really, really tight. And obviously, I've got guys screaming at me wanting to be paid.
Yeah.
But,
what type of like contractors do you work for? If you mean, I know that it's within the construction.
Commercial.
Is it joinery?
Commercial contractors. Yeah, larger principal contractors. That some of them don't always like paying or like to delay payment as long as possible.
It's all too common, unfortunately. If you mean, they'll just kind of a delay it and they'll test your patience. Unfortunately, within the kind of a construction industry, there is options, if you mean, but it's the prices and the kind of a charges it's put against risk. So dependent on who the clientele that you're working with, you're going to see the rates of anywhere between, I would say, 1.25 to 2% per per invoice. That's what it works out at. I don't know whether you've kind of seen the similar before, but there's your Bibby contract, your Bibby does it, your Sonovate, your Aldermore, your eCapitals. They're about 4 or 5 kind of a lenders there that'll kind of do it, but they'll pay you 50-60% on your invoice day one.
Right.
Day one, and then once they kind of are repaid, when the invoice is kind of paid back, you'll get the remainder minus whatever kind of a charges that they kind of take off. So you'll get the full invoice back minus whatever their kind of a charges is, and that just keeps up a kind of a cash flow.
Right. Okay. They're quite they're decent rates compared to what I've sort of looked into before. They're like more on the 8, 9, 10%.
Yeah, that's
obviously it's dependent on credit checks really, and to be fair, our credit rating is okay really.
Yeah, invoice factoring is not done on you. Do you mean, so they don't search into you personally? They don't search into your business. They're more interested in where they're getting their money from, because the factoring company or the factoring funder is more interested in who's going to pay them. So and
Right,
they'll
okay.
basically give you the money for your invoice. But
Mm.
any issue what they've got that whatsoever, they'll go to task on whoever owes you the money. So this is why some of the companies don't really want to work with factoring facilities, but it's because they're in a factoring facility themselves.
Yeah.
So
Yeah.
it's
Okay.
more, if your rates are high, it's probably because whatever lender that you've spoke to is not really comfortable working with that entity. But it's
Right.
definitely worth you pursuing more and having a kind of a conversation, because what you
Mm.
don't want to do is stress yourself out if you're like struggling to kind of get all yours done, and then they're effectively subby bashing. So like the 60 days then
Yeah.
becomes 75 days, if you mean, and then that's 15 days that you've not had your money, but at the same time
Yeah.
you've paid your guys another 2 weeks' money. I mean that's
Yeah.
they'll test it that way. Whereas day one, you'll get 50% of your invoice. If it's a 10 grand invoice on day one, if you mean, they'll pay you 5 grand. So at least it kind of keeps the wolf away for the door. But it's not. It's obviously just trying to get the right fit for lender for what type of business that you do.
Yeah.
And there's many.
Yeah.
There, again, you speak to the right broker, you'll definitely find the right option. I mean, there'll definitely be somebody there for you. And there's always a wee bit of negotiation. I will say that
I kind of tend to, yeah, I kind of tend to look at it kind of at the last minute when it's like the pot's running dry,
yeah,
and do you know what I mean? And we're at the last few days, and then we're leaving ourselves in a bit of a vulnerable position then.
yeah.
Whereas I'd like to have that in place just in case, you know.
100%. What my kind of a clients
Mm.
tend to do, or what I advise them to do, because it always comes down to money. Like, listen, this is far too expensive, if you mean, or it's more than I would like to pay. And you're like, right, I can understand
Mm.
that. However, what's the alternative? If you mean that you don't pay your staff, you lose kind of like good subcontractors or whatever. But if you just add that
Yeah.
extra 3% on, for example, per invoice, who you're working for is not really going to miss that out. And as long as you kind of keep your bookkeeping, so that extra 3% goes to paying the fees of the factoring facility, then you should always kind of keep yourself in black.
Yeah. Yeah. Worth a
Mike, can I just
chat.
ask a couple of questions here?
Yes.
So I think from what Sonny's talking about, that this sounds like a pretty sensible option, right? Because the margins in construction should be at a level that you're able to absorb that costs fairly comfortably. Now, my understanding was that if you were doing, factoring or invoice discounting, that the upfront payment was more than 50%, Mike. Is 50% the average, or can you get sort of say 75% of invoice?
I'm being very, very, very conservative here, because I don't want to kind of put anyone who's on this call into a false sense of security. Do you know what I mean? And be coming out and they said, "Oh, that guy on the Power Within, if you mean meet the expert, he's not really an expert. He's a fucking idiot." Do you know what I mean? Because they're quoting me 50% and he told me 75 to 80%. I don't want to kind of now. Can you get, dependent on who you work with, or the clientele that you work with, 100% you can get maybe 65, 70%, 75%. So if you've got good contractors that kind of pay on time and everything, then it's less like risk to the lender. However, the
Oh yeah,
construction industry, unfortunately, and I just want to be crystal clear with everybody, because I don't want to bullshit anybody. Do you know what I mean? It's not the point of kind of coming on and you meeting an expert, for example. They're really comfortable around the 50-60% mark. That's where they're comfortable.
okay.
There's a good chance that you're going to get more, but that's where they'll kind of start with. And
No,
if you've
that
not
makes
got a
sense.
facility, then 50-60% is better than kind of not having anything to start off with.
Correct.
If you've got a good contractor, then could they go up to 75-80%? 100% they could. They definitely could. But it's not on you. It's on who's
It's on
basically
them.
providing you the contract.
Okay. So let's keep it at worst case scenario or sensible scenario. It's going to be around about the 50% mark. So Sonny does an invoice for 10 grand. He gets 5 grand pretty much within a couple of days. Now, there, there's no great risk here. am I correct as well, Mike? Because it's been a while since I've done factoring myself. It's been a good number of years. There was a couple of things I thought were great, whereas the factoring company, the invoice discounting company, were always the one that were doing the credit checks and then deciding whether it's go no go for lending on it. That bit I liked. What happens if it goes over a certain time? So Sonny had said that his contractors were taking 60 days. What happens if it goes over that 90 days? At what point does the invoice factoring company claw back the money they've paid you?
So it's not essentially, we're not really, or they don't really kind of look at it as more of a kind of a clawback scenario anymore. They'll do everything in their power that they possibly can, including acting as your credit facility. Do you mean? So they'll contact whatever business it is and basically say, you're overdrawn here, when can we kind of get paid? When are you kind of going to be paying it in? And if they don't, if you mean, then it's actually good for you, because then they'll go down the legal route to kind of take their money. Now, I know that legal route probably sounds horrendously bad, but if you've got something, if you're owed tens of thousands of pounds, if not hundreds of thousands of pounds, which I've seen in the past with companies, and they go down the route of trying to like subby bash or whatever, you've got more power behind you.
Yep.
With a factoring facility, because then you're going to get the money back. So it's not even you're going to get the 50% back or whatever, because you've already been paid it. You're going to get everything back that they're kind of effectively not paid you.
Excellent.
Yeah,
Sounds like
yeah.
it's maybe worth considering, Sonny, because
Yes, yeah, definitely, definitely.
the it's becoming more and more popular. Mike, what can you do it confidentially so that your customers don't
You can.
know you're factoring?
Yeah, so there's factoring's evolved. It used to be a bad word, and not many people. And the bank, the only way kind of a factoring really came in is when the banks pulled the overdrafts. That's an absolute fact. If you mean, so when the guys at RBS and whatnot, if you mean, started pulling overdrafts and Clydesdale Bank, then you had no option. They would kind of say, right, we're taking away your shiny £200,000 overdraft. Oh shit, I need that overdraft. If you mean, that's what basically keep my business afloat. Right, okay, we're going to put this factoring facility in, but it's now 300 grand. So I mean, but they would only do that. It was, if you've got a factoring facility, it's more that you're in a position of strength rather than a position of kind of a detriment. So it's more, if you've got a facility behind you, it adds more weight to your whole proposition. Fact, because you're going to get paid. It's not if you get paid, it's when you get paid.
Good point. Okay, I've got a question. I'll go to Stuart next. Stuart's got his hand up, but Roman just came in there in pole position with a question, so he's put it in the chat box. Hi, Mike. I have a question about startups. What do you think looks more appealing to lenders? A company with a few clients and funds in its account seeking additional capital for growth, or a company that has invested in marketing, attracted more clients and employees, and is breaking even after a year, now looking for further funds to expand. This is assuming the company has been established for over 4 years, but recently shifted its service focus. Does that make sense, Mike? That's from Roman.
I think the second one's always going to be, if you mean, so if you've got like a business and it's established and it's 4 years and you're looking for additional funding, I don't know what type of business is it? Is it like, if you mean, so it's in the construction sector, if you mean, but what type of kind of a business is it kind of a Roman does? Do you know?
Roman, just want to tell us what kind of business that is? There we go. Let's put it in the chat box.
Construction.
There. Construction. Yeah.
Maintenance.
Construction maintenance. Yeah.
Yeah. So, for trying to grow. Maintenance, kind of a construction, you're better if you have, it's better if you have a track record, if you mean, with the clientele, because then you can build a picture for whatever lender you're going to take it to. So you've got where you want to take something out of it as in a secured loan basis, or you're willing to kind of provide like a PG, or you can go to like your funding circles, your iWalkers, your Fleximizes. All these will kind of provide some sort of some form of SME kind of a cash flow funding. But it's always better if you've got something established there. And if you're looking to grow, it's what does that pipeline look like? Do you have a business plan? And that's where working with your broker can essentially tell your story to whatever lending channel that you're looking to put it down.
Excellent. Roman, does that help? Excellent. Stuart, over to you. You've got your hand up.
Just going back to what Sonny was saying about sort of financing, if these companies are taking so long to pay you.
Yeah.
Obviously, what's going on in the news recently, these companies are folding left, right, and Chelsea because they're living outside of their means. The bigger companies that is. Does that finance company then return back to you to replenish what they've lent you, or do they chase the liquidators and go on?
They chase. They'll get their money back because they've taken some form of kind of a security. They'll get the money back. But
they'll go after the company that's folded. It's not down to you to get involved. It's just like that. You won't get the rest of your invoice if you say Sonny's finished his work and he's owed 10 grand and it's at day 70, 75 and they still haven't paid him and then they fold.
Yeah.
He's not going to recoup any money. What's left outstanding, is he?
It could, if you've got bad debt protection, if you mean legal protection on the facility, then when your lender or the factor who's provided you with the factor money, they'll go to task with the liquidator, and they'll get whatever they can get back. And if that means that they recover enough to obviously offset them to get the money, and whatever's left they'll pay the remaining. So if they've paid you 50 grand and it's like a 100 grand invoice, you could see yourself getting like 10, 20 grand back more.
But the lender will take back their piece first.
Definitely, 100%, because they've already paid you out.
Yeah.
Because if the lender's already out of pocket day one, so they have to. So they're going after the client for their money. If you mean the contractor. So if it's a 100 grand invoice and they've paid it's 50%. If you mean they've paid you 50 grand day one, so you've already got 50 grand in your bank. So you're owed 50 grand.
Yeah,
but you wouldn't get yourself into further debt. Say a larger contractor went into administration, and you've used that lender to facilitate an invoice. You wouldn't get in further debt with the lender. They would just take it up with the company that has gone into administration.
Yeah, so if you've got you've got like a factor, you're not only going to have like one company. If you mean that on your factors, you can do Stuart said there, you can do it confidential, you can do it selective. Whereas before they used to kind of take, you would have like 10 customers, and you would like a lender would kind of take the 10 of them. You can pick the 6 that are kind of a problematic and pay you within 60 days, and then you can have another 4 that pay you within a week to 2 weeks. So that money can come in, and that kind of keeps the cash flow going. But they would just stop your facility. You could still earn off the rest of them. But on that one problematic, they would just say, listen, we've got a problem with that. We can't pay any more money out, but nor would you be doing any work for them, because you would that would make good business sense for everybody. If they're owed you £100,000 of a contract, if you mean, and then they're not paying you, the factor's already kind of paid out and they're taking them to task, you wouldn't do more work for them anyway, regardless.
Right, yeah, of course.
This is really interesting, and I think there's a number. What I like about this is there seems to be a lot of flexibility. In days gone by, invoice factoring was 100% of your book. You would get the money. If it wasn't paid 90 days, into retention would claw it back. It seems to be a lot more
it can be a lot
favourable,
more
shall we say?
Yeah, factor facilities. It's evolved a lot. If you mean, we've only properly started getting into it in the last couple of years as a broker, because it had, dependent on who you kind of spoke to, there are good stories and there are kind of bad stories, but certainly within the construction industry, there's a lot of subby bashing, and it gives more strength to like everyone that's on the call. Do you mean I'd be, unless you don't need it and you're cash rich and you've got money there, then no, don't use it. But 9 times out of 10, it's required. Plus, it's less of a risk for you and your business because you've got the back and the weight and the legal powers of whoever's providing that factoring facility. Because if your client doesn't pay you, they'll take them to task.
Like I said, like you said before, like in the old days, I'd love to have a 50, 60, 70 grand overdraft, but they're just not non-existent anymore. But this sounds like
overdraft.
Yeah, exactly.
Yeah. But again, Sonny, that's really why invoice discounting and factoring started to become more and more popular, because banks weren't traditionally given overdrafts. And it makes perfect sense. I would say.
Plus, an overdraft.
No two businesses the same.
So, sorry, I just want to come in there, Sonny, as well. So an overdraft is effectively given to you against your business, and it takes on the personal guaranteeing, and in some instances, a secured guarantee over you personally. So you're on the hook. So if somebody doesn't pay you, you get a 50 grand overdraft. The bank's coming after you. They're not going after who's paid you. They're coming after you. Whereas with a factoring facility, if someone doesn't pay you and you've kind of got the money there, the bank's going after them to recoup their money. I mean, so they're going to use their full legal power to recoup the money. So it's a better of two evils, to be brutally honest with you. I'm of the opinion if I was a construction business, right, and I had a lot of kind of subcontractors working for me, and my payment terms were like 60, 90 days, I would have a factoring facility, and that's the best endorsement I can give it. Like regardless of what rate it was, if you mean, I would 100% have it, because whatever I was charging out, say that job's going to cost me 5 grand, right? I'm just making these figures up. I'd be charging at 5,200 quid, because then that £200, I'm going to offset that against whatever I'm paying for the facility, because that's peace of mind and guarantee for me that I'm going to get paid.
It's a peace of mind and guarantee, Mike. I think it's important because we all know that the recent failures and whatnot, and potentially more in construction, has been horrendous, and we know we're coming into the silly season. January is going to see a load more casualties as well. So I think anything that protects and gets that cash flow, because as I say when I'm working with clients, very rarely do businesses go bust because there's not any customers or because there's not any ideas, there's not any enthusiasm. Businesses don't fail because of that. Businesses fail because they run out of cash.
Yeah.
Because you're not getting paid on time, or somebody shafts you and whatnot. So I would say, if that's of interest, get a call scheduled with Mike so that it can go a bit more bespoke into your business. So that's been really good, Mike. That was again, looking at things from a different angle. Anybody else get any other questions or any other topics for Mike? Just put your hand up and go for it. John, you're back on.
Yeah, I had another one. One thing that I've looked at before when I was exploring different finance options for development was I could get 100% development finance for purchase and construction on the basis that I had a guarantee of sale. So in one instance, I did go through the process and I had one of those. What I wanted to ask was, have you actually seen that done in practice? And if you did, what was the result of it? Did it work, or did it make things too tight?
It makes things very, very tight. Have I seen it in practice personally myself? No, I've not done it myself. Do we have lenders that come on and basically say that to us? Yes, we do. But we're the ones kind of carrying the story, which is usually negative. And it usually kind of is, yeah, this is what we can do, or this is what the lender can do. However, they're not going to do it in your situation. And here's the reason why. So 100% of purchase price and 100% of kind of a development, yeah, they might. That's on a combination of like bridging, development, and kind of like mezzanine, and that lender's willing to provide the three. So that's where they get the kind of 100% from. But within that three, there's many different charges that's involved in it, so it becomes very, very kind of a costly.
Yeah. When I priced it out last time for the appraisal, by the time you added on all the fees for the brokers, the reduction for the guarantee of sale, it made it unviable. So it didn't. That's why I asked. real, like in a real world instance, if you'd actually seen it and it worked, because I think the same as you. Practically, I don't think that does.
It doesn't, and again, I'm here to kind of give honest, clear advice, if you mean. So I'm not trying to sell anything, if you mean. I promise a world, because and not deliver. It's not me as a broker. It's certainly not me as a person. I think in some instances, if you've got a development, which I did this with one of my kind of a clients, but it wasn't for 100% of development. They used their own property to take out money on a second charge. And they put the phones in, and they did everything else, and it worked very, very well. If you mean, and we kind of a topped it up a couple of times. If you mean, when we got, but at different stages, you got it revalued, and the lender basically said, we'll give you another 40, 50, 60 grand, and that kept the fees low. But when you're talking about with 100% of development with a guaranteed sale at the kind of end of it, there's 3 or 4 different arrangements within that. Do you know what I mean? Like, as in arrangement fees, and that's where you're talking about the broker would get something. It's not typically always the broker. The arrangement, obviously, the lenders using that to kind of have their setup costs, and it can become, unless you've got deep pockets, it's pretty. I can understand your frustration. You're like, well, what's the point in doing this? Because I'm paying away 20 or 25,000 pound in fees. It's pointless. It eats into your profit.
It was massive. I mean, that was for a like quite a big development, which would have just been, I couldn't get anywhere near the money for it. So it was an awful lot, but
yeah.
Okay.
But a good broker will kind of offset it for you, if you mean. So they'll take into your own circumstances, whether it's kind of a business and personal, and say, right, this is the option that you've discussed to me here. This is what you can do, or what's your assets and liabilities like? If you mean, how can we kind of do this? Because it's taking a second charge out, if you in mirroring something against your mortgage, for example, which I mean, that's the cheapest route for most. And then once you've got it, then repay it back after like a year or two. There has to be a caveat. It can't be after 6 months, 9 months, 12 months, because then it falls into that criteria of potential money laundering. But if you do it after kind of a 2, then you're going to get like mortgage rates, which is very, very cheap. But you get your kind of a capital, and it's just how you do it.
Excellent. Okay. Any other questions for Mike? All done? Are you happy? Mike, just a quick one here. We've talked about property, we've talked about invoicing, we've talked about assets and bits and pieces. Quick one for you when it comes to assets such as vehicles and plant, right? There's obviously various options on leases and HP, and I noticed in our WhatsApp chat, there's a lot of people asking about vehicles. What's the best route to go down? Is it leasing? Is it contract hire? HP? As a lender, as a broker, what's your thoughts on the best way to buy vehicles and plant?
Yeah, contract hire and leasing is always going to be more expensive from the outset, from day one. Plus, you don't get to add that onto your balance sheet as an asset. So it could be you have to pay 3, 6, 9 months up front. So if that's £300 per month, for example, then if it's 9 months that they want, it's going to be a kick in the backside off of 3 grand that you have to kind of pay up front. Going through like an HP route is the way that I kind of always tend to advise my clients to go down, so you could get away with like 5% deposit. Sometimes they'll just do like a VAT deposit, where you can do like a VAT deferred. But yeah, it's and then you've got it as an asset. So if you want to kind of sell it on after 3, 4, 5 years, you've paid it for. Let's you take it in a 5-year agreement. You just very similar to what you would do with your own personal car. After 3, you would want to kind of chop it in. You're buying another piece of kind of a plant equipment. By then, you would have a deposit to go down in the next one, and you kind of build then. But it goes on as an asset on your balance sheet, and you can kind of depreciate against it, and it kind of saves in tax, rather than a finance lease or a contract hire. You will never ever own it, and yeah, there's some minimal tax relief, but it's a lot better, in my opinion, to go down the route of kind of actually trying to own something.
I would agree with that. I would say HP wins every time. Where we get caught out is we would lease our vans, and we took care of them, right? But when it came to the end of the lease period and the leasing company's taking it back, oh,
Yeah.
it's got a wee scratch here and it's got a wee mark here, and you're like, it's a van for fuck's sake, right?
Yeah.
And we ended up paying, hundreds, if not thousands back. Whereas it's HP, it's yours, and it doesn't make one jot of a difference when you're selling it. So
We
I
came up
thought
against
HP would be the answer.
we come up against like not too long ago there, where a client had over 22 vans, and they went through a company called, and I don't know whether I'll just say it, Northgate, and the exact
Oh,
same thing there. Oh my God. And I seen some of the fees and the charges, and they had actually come into a cash positive position. So the managing director took his eye off the ball. And it wasn't until I sat down in front of him and I said, listen, look at all that you're kind of a pain away there. Your admin member of staff just provided me of what you've paid Northgate over the last 12 months. Do you know that I could have got you another 20 vans for that cost? No, I
oh
didn't
my
know
God.
that. And plus, yeah, honestly, and it was just like, right, wow. I think he sacked his accountant because it was becoming too cumbersome and too lazy. Because his cost just, somebody needed a van, they were taking on an additional member of staff. It was just like, yeah, let's go to Northgate. It's easy, it's more straightforward, but they were tying them into like 12, 18, 24-month agreements. And then when they were due to go back, he was the one that was replacing the tyres on them. If there were a ding on it, he was kind of getting it repaired. And then at the very end of it, when the leases were kind of expiring, or they wanted to, that one's a 22 plate, we need to put it on a 24 plate, so we're going to come and pick it up. Oh, by the way, £4,000 worth of damage, you need to pay it. And they would just take it out. So it was literally a nightmare for them. And they were just paying it because they didn't want to kind of upset them, until I says, have a look at it holistically. Here's a quote for quote, if you mean identical to what you've got now, but even paying the top end kind of a deposit, if you mean in the lower end kind of a deposit, you could have got another. It was the same amount of vans. It was honestly frightening. And we do leasing as well. I want to add that in. If you mean, we provide contract hire, we provide leasing. If you mean, so we've got the lenders that can kind of do it. It's if you're a new startup and you might not kind of have different things, then potentially leasing will give you that option to do it. But HP, like again, about 4 months ago there was a chap that just started out in kind of a joinery. His credit wasn't too hot. He had a 10% deposit, and we managed to kind of get him HP on a 16, 17 grand van. It was 5 or 6 years old. I mean, so there's always, there's always something options you can do. There's always options. There are always options.
Excellent. Okay, just conscious of the time. Has anybody else got any other questions, or we will wrap up at that? Any hands up? No, I think we're all good. So everybody, I've already emailed you Mike's contact details. If you look at the email, you'll see Mike CC'd in it. So you've got Mike's email address. I'll forward that up tomorrow and give you his contact details. I appreciate finance is always a hot topic. And there's maybe some questions that you've got you didn't feel comfortable asking in open forum. So please contact Mike and do that one-to-one. And I'm sure Mike will be able to help you out with all things finance. So Mike, thanks. That's been absolutely brilliant.
Thank you very much.
Love the way you just opened up the floor and let people talk. And thanks everybody again for coming along tonight. I hope that's been helpful. And like I say, I'll email you tomorrow and give you Mike's contact details. Thanks again, everybody. Have an absolute pleasant evening. It's absolutely howling down here. It looks like autumn's definitely arrived. Have a pleasant evening, everybody.
Lovely. Thanks, cheers. Again. Thanks, Mike.
Thank you. Thanks.
Thank you.
Cheers,
Have a nice night. See ya. Bye-bye. Cheers, Stuart. Bye-bye. See ya.